I mean, come on. If you didn't think the market was going to be up today, come on. Come on. Stop. You knew the market was going to be up today. Bear with me. I am getting my everything set up here. Save. We're going to go to live chat. Close that down. Let's see. I have a new message. I need to get rid of all of that. NFL comeback of the year. Man, I just don't not read my notifications on my iPad. Morning, Joe. More Scott. You. Let's go live. And then there's the 2-1. Okay. We'll hit that thumbs up button. I wasn't asked to watch an ad. Hoo-wee. Just so everyone's aware. I mean, it's like 3 of us in here, but if you're watching this on the replay, this was what I posted yesterday. Morning, John. It's a 5-minute chart of TQQQ. If you were trading it on, 5 minutes, and I think I posted this in the private Facebook group, may have posted it on Twitter. I'm not sure where I posted it. But this is Jay Powell's speech, and this is yesterday's action, not post-market. It's all actual market, so I didn't do extended hours. But and the jobless claims are good. Productivity's up 3.2% versus 2.5% estimate. Everything's good. But here's Powell. Hey, we don't know if we're going to, cut in March. Oh, by the way, yeah, we ain't, I'm buying it. Just so everybody knows, I mean, Alpha Picks, if you go to the link tree and you go down here to the third one, Alpha Picks, this saves you some money. I think it saves you half off. You get like $100 for the first year. But they bought a new one today. So if you want to see it, before I get started, I will tell you what it is during the podcast. But if you want to see it, it is right there, and I will buy it. But here, just to explain this was where Jay Powell, this started to fill the gap from yesterday's open. And it started to become, oh my God, we're going to rally, because he's not saying that rate cuts are off the table. In this minute, at 2:45, he said rate cuts are off the table for March. I mean, he didn't say it outright, but he said, I would not expect rate cuts in March based on the meeting that we had. So he said they're data dependent. They don't expect it, but he said March is unlikely. Everybody said that March was unlikely, but yeah, that was a bit tough to swallow. Now, here's the killer, and this is what we'll look at. I will put in display extended hours, and this is what's good. Absolutely no rate cut. Whoop, we've come back up. So we're not at the place where on TQQQ where he said that, hey, we're just data dependent, blah, blah, blah. But at least we're getting back to that. Now, there's no gap in here because the after hours, there wasn't a gap. The gap was really from here to here. And so we started to cover the gap, but we didn't finish that gap. So we've covered the gap in pre-market. But yeah, that was essentially what went on. So just so everybody's aware and we're all on the same page and scans. Yeah, there's nothing in the core. I mean, yesterday was a horrible down day, so nothing in my brokerage holdings. Covered call ETFs. Nothing in that. Energy names. I mean, it was pretty universal that it was down yesterday. So, morning, William. SCO. Oof. Oil. NXE. How did NXE go down? SCO, NXE, and Boyle. Boyle is a cross up. I do not want to display extended hours. Hold on. Let me go up and take extended hours off here. Done. NXE, Next Gen Energy. Morning, Mike. That's just been a solid. I mean, that's... And Boyle. Boyle, I want to see. We don't have confirmation, but it's similar to this. I mean, look at those 3 or 4 candles. Similar to that. Similar to this. Not quite as low. If we're really looking at a MACD, kind of similar. The RSI was similar. The MACD was similar. And you ran up. Let's just see. 35%. I mean, that's no small move there. This was a huge move. That was a big move. 36%, same kind of thing. I mean, you're looking at 35, 36% there. So if we get confirmation, morning, Chris. Mike, they sent out their first email today. I'll release if you're signed up for Alpha Picks. If you're not signed up for Alpha Picks is down here, third one. And I did respond to, okay, let me put this out there. I had somebody in the Facebook group, and the Facebook group is private. If you want to join it, it's at the link tree. It's down here, and you can ask me questions. I'm pretty good at responding. But they said, hey, I signed up for TrendSpider, longtime listener. I signed up for TrendSpider. I signed up for Seeking Alpha Premium. I signed up for your daily newsletter, the paid newsletter. Started trading last June. I've helped them a bunch. And you know, I mean, listen, that warms my heart. Whether you signed up for everything, the learning part is what I really care about. And Colby, I'll look at rum for you. I'm not a fan. But, yeah, and they said, what's this Alpha Picks and should I subscribe? And does it make sense? Alpha Picks is up to you. And I will tell you, with TrendSpider, with Seeking Alpha, all of these tools, make sure your portfolio that you're trading with is large enough. I don't want somebody with a $5,000 portfolio to buy TrendSpider at $1,000 a year. I don't want somebody with, $1,000 portfolio buying my paid newsletter at $120 a year. It just, again, the goal is to learn and to make sense of this. But at those small portfolios, I think you can't afford to buy back time. And that's what all these tools are about. They're about buying back your time. It's not about leveling up and making you a quote unquote better trader. Free tools. Learn the free tools. Learn how to do stuff. Hold on, I'm going to put you on mute for 1 second. I had to say goodbye. So you'll hear the dogs go a little nuts. My girlfriend's leaving. Just make sure you have a large, and if you have any questions, you can private message me. My email is up here. You can email me privately. You can DM me, whatever you want. But understand that you can absolutely sign up for these tools. If you think your portfolio isn't large enough or you have a question about it, just DM me. Or you can ask, in the Facebook group. It's a great group, and people will basically give you their review of stuff that I've done. I will tell you these are the 4 tools or 5 really tools that I have are the top 5 here. TrendSpider, Seeking Alpha Premium, Alpha Picks, Webull, which is just a great app. I will tell you, if you want a portfolio, message me and I'll hook you up with Fidelity. But Substack, which is the newsletter, and these top 5, those are the real tools that I say, hey, these are things that I personally use and I think you should use. I have plenty of opportunities to promote other things as an affiliate, and I just don't because I don't use them. Motley Fool, my dad has a subscription. I went back and listened to the first episode of this, which was April 2020. And every stock that I picked in there, everything that I predicted worked. So, I didn't have TrendSpider at that time. I didn't have Seeking Alpha Premium at that time. I didn't have Alpha Picks. I didn't even have a Webull. I didn't even have a freaking newsletter. So, somebody's trying to get into the Facebook group, asking for a code. Let's look at rum real quick. I'm going to start. Okay, energy. You know what? Let me look at that after I get through the scans. SDS, these are levered ETFs. That's short. HIBS is short. SMDD is short. SPXU is short. Yeah, all short. I would not go short in this market. I just don't think. I'm not buying SQQQ. I mean, yes, it triggered a couple of days ago. And the only reason is it just bothers me. I'm still holding TQQQ. Oh, ELF, and Lowe's. ELF. Their earnings are coming up. Yeah, that 65-minute algo is fantastic. For things like Rumble, that 65-minute algo is just gold. And it's so simple. I mean, I'll just tell you. There's it's on the TrendSpider, the welcome letter that I give you. It is basically outlined in the video that David Yoakum from Yoakum's Trading showed me. It's just an 8-day EMA. Buy when it crosses up, sell when it crosses down. This is crazy. S&P. S&P 100. Lowe's is the only one. Wow. Okay, let's go look at Rumble and the strategy tester for Colby. I don't know if you're new, Colby. I don't even know if you're still here. Hopefully you're still here. Let's look at Rumble. Rumble. First off, I am not a fan. I think Rumble doesn't have the viewership that YouTube does. And I know creators who have gone over there don't get the viewership. They typically come back to other platforms. So I don't think right now, it's hard to scale this stuff. And that's what you need. I mean, it's a chicken and egg thing. You need the creators to create the content, but you also don't have the money to present them. You don't have the viewers to actually pay them. So it's kind of like, a little bit. But here's Rumble, and this is just Rumble from a technical. Remember, Colby, there's technical and there's fundamental. So technical refers to the charts. Fundamental refers to, hey, how are they earning? What's their future projections? Blah, blah, blah. So I'll show you 2 platforms. This is charting, and you can get charting from Webull. You can get charting from any brokerage firm. Robinhood does not have good charting. The reason I recommend Webull over Robinhood is because Webull's desktop platform, you really want to do it on a bigger screen than a phone if you're actually investing. So a phone's good for like mobile trading, and that's why I suggest small accounts in Webull. But you really want desktop software. Here's Rumble, $4.67. The algorithm got you in. Now, here's the killer. And this is the killer. My 4-hour algorithm over 2 years, you have 35 trades over 2 years. So it's just about 1.5 a month. It's not tons of trades, but you have a few trades. It makes you 32.3% versus losing if you had just bought and held Rumble for 2 years. You lost 41%. So it's a good one. Fidelity's great. Fidelity Active Trader Pro, it's fantastic. In fact, Fidelity has that trading dashboard that they now have on their website. Look at that one. That's a fantastic trading dashboard. I like using Active Trader Pro for the charts and then using the trader dashboard to actually trade on the computer because it's nice and quick. Larry, but here's Rumble. So you got in at $4.67. What you can see here, okay, see how there's no volume here, Colby? Look at this. That tells me hype trade. There was some type of news that sprung this up, whether it was Trump, whether it was DWAC, whether it was some type of partnership that they had. There was something on this day, January 23rd, started January 22nd, but that spike in volume right there drove that price up. You have confirmation over that 9-day. Those Bollinger Bands are wide open. The RSI is high. But if you haven't gotten in on this run, there's no chance that this one actually holds this. And the reason is you go over to fundamentals. And so if you go to Rumble here, they're losing $88 million, okay? They have cash on hand of 95 cents. They have a total share count of 111 million. So here. What's 111 million times 0.95?
Is 105,450,000.
So they barely have enough cash to get through 1 year. With losing that amount of money, they'd have to find something more significant in order to do that. And the way that they do that is they actually dilute shareholders. Yeah, that's what it is, Barstool Sports deal, which I don't think is a bad deal at all. I think Barstool Sports brings a ton of viewers. The problem is, are those viewers staying? So while you have this hype and it brings it up, your price to sales is 23, which is absolutely ridiculous. Your price to book is $6.98, which is absolutely ridiculous. Year to date, you're up 52%. So it's not something where all of a sudden, hey, this is a super valuable company. It's not just the deal. They have to prove themselves. So for a trade, absolutely. You can trade this one, trade it on the chart. And kind of like Chris said, if you use the 65-minute algorithm and you run this one makes you 30% versus losing 28%. And see, this is 65-minute candles. So as you're looking at 65-minute candles, this kind of tells you, hey, I've got confirmation here at $6.42. I'm going to buy it. And see all these red marks? That's how many times you lose. You only win 5%. You win 30% of the time. But your average win is 5%. Your average loss in this is 1.47. So your win-loss ratio is significantly better than just buying and holding. Now, over 8 months, you have 88 positions. So in the 65-minute, you're trading, like Chris said, you're trading a ton. But understand, these are, purely political plays, in my opinion. Even the Barstool Sports, the reason that Portnoy wants to get over here is political. I mean, let's be honest, it's nothing more than political. I think that's the way he's playing Barstool, and I'm not condoning. I'm not dissing on him. I am a Portnoy fan. I am an absolute Portnoy fan, but he's doing this for, hey, I just don't like the politics of Google. I mean, let's be honest. That's exactly what this is. I got to put my do not disturb. So, Colby, I will tell you, trade Rumble. I mean, trade it. And if you're new and you want, here's the thing, Colby. I'm not a guy who's going to tell you to get in or out. You have to make your own decision. I don't know where this stock is going. Nobody can tell you, hey, I should absolutely sell this. This could go to $60. honestly, it could go. I mean, here's the thing. Look at DWAC. DWAC has zero plan. Zero. That's it. But DWAC went from $17 all the way up to $60 here on zero plan. The only thing that happened is Trump won the Iowa caucuses and he won the New Hampshire caucus. That's it. They have not said how they're making money. They're a SPAC. They haven't said anything. They haven't released any financials. So Colby, the issue is not should I sell the shares? It's do you believe in the company? The thing of this podcast is you buy good companies with good products, with good earnings, with good management. And if you don't meet those criteria, you trade it. I'm never going to tell somebody not to get into a stock or to get out of a stock. But I will tell you, I would not trade in Rumble. Personally, I would not even trade in Rumble. Because I just don't believe in it. But, yeah, Chris will tell you. I mean, there's a lot more people on this podcast audience, Colby, that are traders than me. I'm 53 years old. My day trading days are, I do it during bull markets. Like I bought SMCI yesterday. It's not a short-term trade. It's in my retirement account. But I'm looking at buying other stuff today. So kind of, hopefully you got something out of my old man rant. But I would definitely don't look gift horse in the mouth. I don't think that YouTube has anti-free speech. I just don't. I think social media platforms are in a position where, they have to protect themselves. And I think certain things, you call it anti-free speech. I call it, hey, I don't want anarchy on YouTube. If they let everything go on, do they make some questionable decisions? Yeah. But I'm not I don't think there is some conspiracy on YouTube, for anti-free speech. But, I'm a middle of the road Republican, Democrat, whatever you want to call me. I hate Trump. I'm not a fan of Biden. I am what I am. But I also don't think that the big tech companies per se, like Mark Zuckerberg being trounced yesterday by a senator who puts ads on Facebook and Instagram, who has accounts himself, whose kids have accounts themselves. Yeah, come on. I don't get into the political game. I am much more hey, if it makes good business sense, let's do it. If it doesn't hurt people, I'm for it. And I don't think that YouTube outrightly hurts people. I think they try and help people as best they can. So. I'm in the middle, comfortably numb. Yeah, I would agree with Chris. If you want to buy and hold, I don't think, my opinion of Rumble, I don't think it's a Tesla stock. I don't think it's going to make you rich. I don't think they have a good enough product. More than Lane. Yeah, and I agree with Chris that they will dilute. And that's why I went to the fundamentals, Colby. Is you can a good kind of lesson to me was always I believed in a stock, and I forget, it was Geotech or something like that, and it was back in the late 90s, I believe, and it was fundamentals were bad, but I loved the basically, I think it was an IP telephone company, and it was well, I mean, you got to abide by the rules, Colby. If you say something shitty about, and they got taken down, yeah, it's their platform. You got to abide by the rules, and it was very clear, that if you get taken down, so. It's a mad world. But yeah, Geotech, back to Geotech. Fundamentally, the stock didn't make sense, but their platform for IP telephone was one of the best I had ever seen, and I thought it was going to take off. I put, I think, about $500 in that. Now, mind you, I was a smaller investor back at that time. We didn't have the internet to do a ton of research on this company. I just thought IP telephone was going to take off. These guys were new into the business, blah, blah, blah. But the capital costs of IP telephone were huge. So I got in there. I think I lost all 500. The company went into bankruptcy, kind of like Rumble. It's just a capital business. And they had to dilute shareholders, and they kept diluting shareholders. And at that time, I didn't know it. Now, here's the thing. They had so much hardware in the IP telephone space that $500 in bankruptcy came back to me a year later at $1,500. And I think it was Geotel. But that was me holding out a year not knowing where that $500, because you couldn't trade the stock. You couldn't trade the stock back then. So it wasn't something that you could trade. So I just kind of, I try and caution people that stocks like Rumble, stocks like DWAC, there's here, Colby, go down here to Savvy Trader, okay? Savvy Trader has I have two portfolios. There's one you can follow for $25 a month, which is crazy because I release all my trades for free anyway through the newsletter. So sign up for the newsletter, which is free. You can get all that stuff. But this core portfolio, this second one, this core portfolio right here, it has 35 names in it, okay? These are 35 names that if you want to learn trading, you will not get burned on these 25 names. 35 names. Pick out companies that you use. Like, for instance, Uber. Do you ride in Ubers at 65? It's at all-time highs, but I don't think you're going to get burned on that one. Boeing, $211. Yeah, they've had screws missing. I don't think you're going to get hurt. Walmart, it's close to 50, all-time highs at 165, but they just announced a 3-for-1 split. I think you'll be fine in that one. Cleveland Cliffs, $20, probably goes down to 17, doesn't go to zero. Goldman Sachs at 384. In a good economy, this is a $500 stock. Roblox could go down to $20 just based on valuation, but they've got such a hold on the metaverse space that you ain't going down to zero. So just take a look at this list. This is more a list that you want to trade in versus Rumble, which is going to dilute shareholders because they need money. These are all companies that have good earnings with good products, with good management, and they're good companies. Palantir, great, $16. That one's probably going to get popped to 5 with some 25 with a good rally. Their earnings are coming up. So just understand the point of my podcast isn't, hey, we're going to make $100 turn into $300 today. I'm not doing options. I'm not doing risk like that. So take my advice for what it is. But I don't believe that, YouTube has, any kind of ulterior motive. So, and by the way, I am on Savvy Trader, just so you know. Let's look. Best return, 1 month. I'm number 3. 3 month, I'm number 4. So I'm not doing too badly here. I'm not doing too badly at all. You may be interested in the podcast today because there is Alpha Picks, which is the tool right down here, Colby. This is the tool for Alpha Picks. Look, 70% Alpha Picks versus the S&P, 24%. You can see this view performance right here. This one, they're up 92% versus the S&P 28%. So, super. I mean, this, and it's $100. So if you got $400, spend $100 on this. Maybe that 400 will turn into 800 over a year, based on their Alpha Picks. But they do have a new pick today. But again, it's $100. I probably would wait on that one. If you have a smaller account, I wouldn't necessarily do that. But let's see. 8 stocks to watch this Thursday. I have enough to go over. Okay. Let me see. Oh, I'll put it. Yeah. Okay. Let me open up some of these things from the back scale. Fellow Vaughn in Florida. Whoop, whoop. I lived in Florida. Yeah, Colby, don't buy anything from me then. Sign up for the free newsletter, though. The newsletter is free. If you want to get a sense of what kind of trader I am, the newsletter, it arrives in your inbox every day for free. It costs no money. It's the weekend one that's paid. But I give you a lot for free. Compared to everybody else, I'm pretty sure I give you a lot for free. I'm not tooting my own horn, but I am saying I'm not in this to make a fortune. I'm different than most people. I already have my fortune. I am completely fine in the world of money. I don't work. So this is all I do. That's why I can just spend the last half hour going over freaking Rumble. That's a great list. This is how all went down and how Elon, yeah. We're going to put that. This is just this is amazing. And Christian, by the way, FYI, you were 100% right. As I dug into the Elon stuff, I'm more tempted to say that you were right in that it was political. And I just say that not knowing the full story. But I do think there was some political mess in that. Okay, we're going to do that. We're going to do NVIDIA. We're going to do this. Oh, by far, Colby. Not to toot my own horn. By far, I have the best. I just say that knowing that, I'm tooting my own horn. I'm semi-humble. Yeah, this one was good. Okay. Let's go first to the core portfolio. Okay. Okay. Now we're going to go to the Qs. Look at the Qs. I'm here every morning, by the way, Colby. So if you're here in the morning, the audience keeps me humble, and they'll kind of guide you. I'm not a showboat. I'm not a guy who's going to flash anything at you. I'm just a guy that, talks stocks. But understand, every financial person, whether you see them on TV, whether you read them, whatever you do, God, look at that. Year-to-date, Juniper Networks, NVIDIA, Netflix, and Palo Alto up 25%. Year-to-date laggards, Tesla, Market Taxes, Archer Daniels, DuPont, material stuff, just getting hit. Everybody, no matter who they are, does not know where the market's going. Nobody can make a decision for you. Nobody can tell you, absolutely, you should buy these options, you should buy these puts, buy these calls. Nobody knows what the market's going to do. So you have to make your own decisions. And the way to make your own decisions is to get educated and understand that, I was on office hours. If you are a TrendSpider subscriber, by the way, and you are not on office hours with Jason, he's going to be on today. I think at about 3:30 he gets on there. It's live. It's here on YouTube. And Jason Krutsky, from TrendSpider. He is a master trader. And he said something I really, really appreciated yesterday was somebody asked him about Spirit Aerosystems. And Joe, you'll appreciate this. He went over the chart and he said, yeah, here's the support, here's this, blah, blah, blah. And he didn't go over any of the news. And so in the comments, people were commenting about the news of the bolts and falling off and how they built the fuselage. And I was even commenting about that. And Jason specifically, and this is why I appreciate Jason. Jason said, I know nothing about that. I'm a technical trader. So Jason just looks at the charts, nothing more. Absolutely nothing more. So, and I appreciate that. I mean, he's a technical trader. He doesn't do buy and hold. He just looks at the technicals, and that's the way he is. Yeah, he's really good. And Chris is on there all the time with me when I'm there with Jason. He's so much better than I am. Hey, fellow Gary. No, I was a product manager. You can read all about me in here. Go to Daily Stock Pick. There's an About section. dailystockpick.substack.com. Do I have a background? No, I guess I don't. Where do I have it? Is it on YouTube? I have it somewhere. Just to give you an idea, Gary, I was a product manager for a bunch of internet companies. I didn't make a fortune, kind of average, high 5-figure, low 6-figure kind of salary. Nothing big. Wound up investing in Apple, Amazon, Netflix, Tesla, most of the high growth names that today are called the Magnificent Seven through the 2000s and rebalancing. And my grandfather taught me about stocks. I have zero financial background. I have zero tax background. Just do it for fun, and decided to start the podcast. So my only qualification is that I'm retired at 49 and I don't work. So it's not a bad gig, but I don't have a financial background. No. I say this is not financial advice. This is simply just my view of the markets and stocks that I may trade in, I may not trade in. And you guys get the ability to ask me. But I am not a guy, I don't even make a living at this podcast. This podcast, full disclosure, it is significantly low 5 figures that I make on this. So I don't make a lot of money at all. In fact, I will tell you, my YouTube revenue last month was $25. I think my podcast revenue from ads was $200. So you can put together however much you like, but yeah. Yeah. Colby, I say Boeing is a buy under 200, but at 214, if you're buying this for a 5-year outlook, I think you're fine. I think you're perfectly fine. Yeah, and Mike, the benefit that I have, to Gary's point, is not that I have a financial background. It's that I like what I do. I beat the S&P. I show what I do. I just tell people, hey, you don't want to be caught off guard in a market. And kind of the beauty of what I do is try and just tell people, hey, there's options out there, and let's take a look at them. I think it was when I first started, and I tell this story a lot. When I first started in the market, you had to pay $50 per trade. You had to call a broker on the phone. There was no internet. There was no email. So I'm 53 years old. I retired. Actually, today, you know what? I'm going to put that in. Today is my 4-year retirement anniversary. And Gary, to your point, I retired in February 1st, 2020, 3 weeks before the world shut down, I lost 40% of my portfolio. I thought I was going to be, set for the rest of my life. Within 4 weeks, I was like, shit, did I just make a mistake? That's a good one, Christian. RTX is great. But yeah, I mean that honestly, that's the retirement dream. I will tell you, it's 4 years. I have taken all of $10,000 drawdown in my brokerage account in order to live. I do make money. I go on contract jobs for Major League Soccer every now and then. I am a low-income person, so I don't need a lot of money. And I do have a high seven-figure, what is it, 7? Yeah, 7-figure portfolio. So, well, I'd say mid, but I don't know. It's enough money to live on. And that came from just average South. I wasn't given family money. I grew up in I never felt poor. And that's kudos to my parents, because I do think we lived paycheck to paycheck, but never felt poor. But they found a very nice community to grow up in. So, yeah, the retirement anniversary is big, so I will celebrate that. Okay, I'm going to hit start recording now because I'm late on this. Good morning. It's Thursday, February 1st, the day after Jay Powell killed the market. But you know what today is? Today is my 4-year retirement anniversary. 4 years. I left the workforce 3 weeks before the world shut down. I lost 40% of my portfolio in the COVID drawdown. So I kind of think that that qualifies me. I've made it all the way back and more over 4 years. I have not taken significant amounts of money out of my brokerage account. Yes, I do trade. Yes, I do work part-time, kind of part-time. But the main thing is, hey, I've made a lot of money over the years. So welcome to the journey. I appreciate everybody. I appreciate everyone's kind words. But remember, there's 2 big rules in the podcast. The first is don't listen to a douche on the internet. I am that douche. So do not listen to me. Do not follow me in trades. Just understand, do your own research. The second is never listen to Jim Cramer. And what did Jim Cramer tell us yesterday? He told us not to buy SMCI. Well, if you read my newsletter, you'll know yesterday I bought SMCI. I bought a rather large position in SMCI. I got in at, 523 is where I got in. I bought 5. If you want the newsletter, it is free. I don't charge for this. You can get it, dailystockpick.substack.com, or just come over to my link tree. It's down here, the 5th link down there. But I did disclose, yes, I bought it at 523. Here in pre-market, let's see where we are. I think it was up 537. I think it got up to 560. My guess is there's a trading range that I kind of saw while I was looking at charts while I was at 5 o'clock this morning. Not on my computer, so it's not drawn on anything, but I think it's between 520 and 560 for the short term. That's where the kind of trading range is. We'll look at that one. We'll look at some other stocks, including one that I'll start off the show with in a little bit, but a Seeking Alpha picks. It's the beginning of the month, so they come out with their pick. But let's look at the Qs real quick. But yeah, kudos to me, 4-year anniversary. If you want, comment down below. Congratulations on your 4-year anniversary. You can send me the message. I'll post them. If you're listening on Spotify, I'll post them. I'll just post them and I'll read your name tomorrow. So if you want, or if you wanted me to look at a stock, just give a shout out. But yeah, 4 years, pat myself on the back. 2 ratings downgrades in the core portfolio from Seeking Alpha. If you want to import your portfolio into Seeking Alpha, remember on my link tree back here, get the Seeking Alpha Premium, $50 off. I think it's $189 a year, but I do this, and what you get is an email every morning. 2 stocks, Palantir and Shopify. Both. Well, Palantir went from a buy to a hold. We can look at Palantir real quick. They went from a buy to a hold. And it's just the quant rating. So understand the quant rating looks at momentum, revisions, profitability, growth, and valuation. They went from a buy to a hold, 3.38. If we look at the history of this one, it has been a hold before. It's not crazy that it goes from a buy to a hold, but it's back to a hold. Now, Shopify is the other one. That went from a strong buy all the way down to a hold. It skipped the buy. It went from a strong buy down to a hold. We can see this kind of downturn here from a strong buy to a hold. I don't believe it. I think in the long term, I think you're fine. I think $80 is that pivot point on the stock. So if you want to get out, you can get out. But let's look at the Qs real quick. Yesterday, I'll go into more detail in a bit, but J. Powell killed the market. You can see I said, hey, there's a button hook happening here. If you want to know what a button hook is, go over to my daily stock pick newsletter, and you can see I have an education center down here, and you can read all of these things. They are a paid newsletter. So just understand that, yeah, button hook is basically a half a circle. And you can see it here. We're button hooking down. Well, where are we today? QQQ is up 0.62%. I always say it. Any reaction in the market is an overreaction. This one is an overreaction, so we'll probably see a little bit of a recovery today. What J. Powell did was take the March rate cuts off the table. And if you want to see his actual speech, let me play it for you real quick.
Fuck your fucking zero DTE calls. Fuck the economy. Fuck inflation. Fuck your soft landing. I am sick of this shit. Fuck Wall Street. Fuck you all.
Yeah, that's not a deep fake. It's not a deep fake at all. But yeah, it's hilarious. Hilarious. But yeah, we're going down. Let me start off with kind of the pick. I will include this in the newsletter, and I will include a link to sign up. Down here, Alpha Picks, it's $100 for the first year. I'm an affiliate. I've just started using it 2 weeks ago. So understand, I would not recommend something that I don't find extremely helpful. It is absolutely worth the price in my mind. They typically release picks on the 1st and 15th of each month. Their pick today, TWLO. TWLO in pre-market is up, I think it's 2%. Yeah, 2%. They don't include prices. I didn't read through the entire recommendation, but just so you know, TWLO is a growing industry-leading platform that prides itself on using better data and AI for developers to build, scale, and offer real-time communication tools. TWLO is focused on innovation and a communication platform as a service provider. Now, all of that comes with the stock pick. They basically go down all the fundamentals, everything. If we want to look at this, what we can do is we can go over here. I click on the Alpha Picks. You'll get this screen where it says subscribe. Now, I am a subscriber, so it takes me in here. And you'll see a ready-made solution for your portfolio. This is the list of all of the stuff that you get on TWLO for $100. And the biggest thing that this portfolio does is it actually performs 92% versus the S&P in the same time period as 28%. Understand there are certain things that go up. Now, is it any, this is one of their big winners, POWL. POWL. It was up 50% yesterday on earnings. Look at this stock chart. I'm not saying buy it. Algorithm had you in at 78.65. I'm not saying buy it. This one is filled with gaps. But in the Alpha Picks solution right here, this, they still say, is undervalued. These are the picks that you get with the Alpha Picks. Understand, it's not Alpha. It's not Seeking Alpha Premium, so you don't get all the premium tools. But you get all of these analyses of these picks where you basically get all of everything that they see. And again, if you go back to the portfolio total return, it's 92%. I had one person who, I think it was Chris, commented on my newsletter, hey, I saw PWOL when you were scrolling through that. I was thinking about getting into that. I got into it. I made my $100 and it paid for Seeking Alpha Premium for the year. Boom. Done. Simple. I like that one. Now, understand, I will go over some stuff here in the podcast. There's going to be a lot more in the newsletter, and the newsletter is going to be free. So I'm going to fly through this because there is a lot to go over. Again, this Powell thing, it is crazy. It's nuts. Merck, former core portfolio member, up based on earnings. Peloton, not a core portfolio, but I do think that Peloton may get bought by Amazon or somebody else. Crazy swings. Earnings were mixed, gave lower guidance. I wouldn't invest in that one. One that went crazy yesterday, NYCB. This is New York Community Bank. They are the ones that took over Silicon Valley Bank, a lot of it. They announced a 70% decrease in their dividend, and the stock fell 50%. Now, here in pre-market, this one was up 2%. Yeah, it's up 1.85%. I always say it. Any reaction in the market is an overreaction. This one, I mean, here's the thing. This is part of DPST because it's a regional bank. DPST was down yesterday. Algorithm got you out. What I say on DPST is traded on a short time frame, but I do think we have opportunity for the upward, up towards the 200-day here on this long time frame. It's a triple levered ETF, so just be careful about what you're doing. One that got a cross up on my algorithm today that I've told you about, long term, you can see that chart. ELF, we got another cross up here right before earnings. Their earnings are happening February 6th. This is a Sherry favorite. Sherry is cosmetics. I mean, she's I can't comment on cosmetics. I guess ELF does have some moisturizers for men, and that's being big. I do think this one is a good opportunity. I don't think it's too expensive. Even though you look at this and it looks expensive here. 74 on the PE. Forward PE 47. You can look, earnings per share past 5 years, up 10%. Earnings per share next 5 years, up 32%. They're expected to grow 66% this year. So understand, I think they're going to grow into their valuation. I think it's $170 stock, and you're buying at $159 today. So you're up there for a little bit. Earnings today, Merck, Shell. We should see Shell. Let me look at Shell real quick. Because I do want to see this one. I was thinking about playing, and I mentioned it yesterday, the energy sector. This is up 1.97% in pre-market. I was thinking of getting into Exxon, and no other reason than I think it's a $110 stock. I think, and that's the thing is, do I care about getting into Exxon and trading this one? 1 or 2%. I kind of think, hey, it's not a bad play. You're under the 200-day. They're going to make money. It's not like they're going to lose money. They're not an expensive stock at 9 and 10. So, I may get into that. But the big earnings play of the day, Apple, Amazon, and Meta, and even LICY and Team. Those four are the ones that I would absolutely keep an eye on. The algorithm got you out of Apple yesterday. Apple just took a dump. We've talked about it before, this 197, 198, getting up into the 200 area. It hasn't broken above 200. That's a resistance level for Apple. If you want to buy anything below that, I think you're fine. Here's a gap going all the way down to 182. You haven't touched it. In pre-market, you're at 185, so you're up 0.49. I don't know that you're going to touch it, but that gap was a dangerous one. We filled this gap all down below. I just don't see a ton of gaps down below that we do. So I do think that Apple presents an opportunity. I probably wouldn't get into it just because the algorithm says get out, but you can look at it if you want. Amazon, I think this is my best earnings story. The problem is you've run from this 152 all the way up to the 160s. I think it's a $170 stock. I think it's a $180 stock. I would not look at this one as playing earnings. While I do think there's upside, I think there's a risk of the cloud coming in light just based on Google and Microsoft saying that their cloud business grew. So I do think we still have 18% to the all-time highs. This is one of the grade 8 that just hasn't reached all-time highs. Netflix is the other one. But this one, I'd probably, if you haven't started a position, I think in the 150s is a fine place to start a position. Meta, Mark Zuckerberg got killed yesterday. I think what we're looking at here is how good is Mark Zuckerberg talking about the glasses, the competition, and the ad business. I think that's exactly where we're looking at Meta. Do we see it pop over 400? I mean, that's a tough ask. Now at 100, I was saying you're getting back up here to this 380, 390 level. You've pulled back. You got just over 400. It went to 406 here just last week. Look at how high the MACD is. Am I expecting this one to? It has to be absolutely perfect for this one to continue to go up. So understand, I'm not adding to this one. I may buy a little bit, seeing how earnings go. If we see a pullback back to 380 or so, I'm loading up. I'm just going to load up because I do think that is one. It's not expensive. I mean, if we go over here to FinViz and we look, it's got a forward PE of 22. That's an average kind of, tech company. That's not crazy. Remember when this was 15 and I said, hey, they're going to grow into this business? They're expected to, earnings per share expected to grow 32% yearly over the next 5 years. 67% they're expected to grow this year. So as you get bigger, it's harder to grow with that percentage. But Team is the next one. I recommended Team back here where it started to cross down at this death cross, and then it got the golden cross. That was at, a month ago, December 18th, a month and a half ago. That was at 191. You're at 249. This is a company that I haven't gotten into. I think is a quality company. I do see a volume levels being up here, and you're fine. It's building that level at 241. If they announce good earnings, I think this one's a good one. Apple, by the way, and I'll include this in the newsletter, symmetrical continuation triangle, which is very bullish in the Webull app. I love that Webull app. Steve Leisman yesterday on the Fed call. Goldman abandons March call, shifts to May for the first cut, which is where I was. Steve Leisman says that, and sees 4 consecutive cuts this year, and then 1 in December for a total of 5. 3 more next year. Steve Leisman says he's at 3 with an option of a 4th in December. That said, there's an argument that the Fed goes only at quarterly meetings. When they publish their forecast, I can see how they can that can complicate communications, but it limits flexibility. So understand the Fed is driving this market. That is 100% what's happening. Powell said he was, that March is pretty much off the table. That's what killed this market. Doesn't mean that the economy is bad. Doesn't mean that anything is bad in this market. Just means March is off the table. They may cut slower than when they actually raised rates. Remember in I think November 2022, or 2021. Hey, inflation is crazy, but we're still not upping it because we don't see it as out of control. It's transitory. I think he said in June or July of that year. Well, he would have been better off raising earlier. So Super Micro. This is a great article in Seeking Alpha about Super Micro. I bought a large position yesterday in Super Micro. Like I said, 253 is where I bought it. Or I'm sorry, 523. I got those numbers, dyslexia. But I got those numbers mixed up. I have a very large position. Now I have a very large position in my brokerage, and I have a very large position in my retirement account. I still haven't sold any of my brokerage. Understand that my situation when I say brokerage and IRA is different than yours. I am low income. I make my money off of some stocks and working, but I tax advantage that. Meaning I don't want to sell a super large, significant 5-figure gain, because that will screw up my planning for taxes this year. I'd rather just hold on to it. So hold on one second. Hey! Sorry, I should have muted. Hey! No, get down. Get down. That is a furniture delivery outside. That is nothing more than a furniture delivery. I am so sorry to scream into that. I should have muted that. Hey, Penny? Hey, why don't you listen to me? Get down. No, get down. Hey, get down. Get down. Get down. Penny. Boy, is this entertaining or what? Come here. Come here. Come here. Hey. Come here. I love you. I love you to death. Yes. Okay. There you go. You don't have to worry. That is a furniture delivery. I am so sorry to yell into that. Okay. I am so sorry to yell into the microphone at the YouTube people. The podcast people won't hear it, but yeah, I am so sorry. So SMCI, risky, absolutely, because I'm buying into this rally. But this article in particular from Seeking Alpha points out it just got cheaper. It just got cheaper. The quant still super strong buy. It's number 1 out of 26 in the information technology. I just feel like this is a good one to buy. It is super, super risky, yes. But we can see here from, I think it was Shay that posted this one. Let me see. It's on Twitter. Oh, no, that's the Breaking Jerome Powell one. But somebody posted on Twitter, and you can follow me on Twitter if you want to see it. But they posted that Supermicro just got cheaper. Their earnings went up. They're super bullish about everything. They just posted a remarkable quarter, and they expect the quarter to continue. How does AMD relate to NVIDIA? Well, this one is bullish on NVIDIA. I am bullish on NVIDIA too. I probably should buy a ton more NVIDIA. NVIDIA today is cheaper than it was when it was selling at 400. So I'm not loading up at 618 right now, but I do want to get it probably under 600. And I don't know that we're going to get to 600. Here's what I'm seeing. Trading between 400 and 500, putting in a nice shelf here. That's an old note. About to be, expect this one to get to 600 before earnings, and it's justified to 650 on earnings. That's where I see it going February 21st. I see it at 650, if not 700. But it did get to 600. Oh, and I put this note in. I think we were trading here at 515. I put this one in. I did not buy more. I still have a significant position in this. I have several lots that I've bought. Anywhere between 300 and 500, I believe, is my my lot size. But you can see we had a huge run up here all the way to 600. The RSI is still in the overbought territory. But this article points out some really good things about how NVIDIA is a bit riskier now, but it totally makes sense. And so I wanted to point that out to you. The Fed yesterday kept rates unchanged. Nothing shocking about that. Powell definitely made it clear 2% is going to be needed to reduce the rates on inflation. It's at 3% now. Just know that. Is this posturing and not wanting the market to get too hot? That's what everybody's saying. It's just posturing. They have kept killing the market. So why a lot of people were saying, don't fight the Fed is key. But in my mind, if you think they are just posturing, not that March is off the table, they may go a full half point in May. But understand, if they don't go in March, you don't have an April meeting, so they have to go in May. But is May too late? Will they go in March? I don't know. You know, if they go between March and May, something broke. And that's the danger that you have. Something broke. But this is the power of the Fed. Do not fight the Fed. But in my mind, I think they are posturing. I think he's saying this without really kind of pointing out, we have to cut. He's saying, just posturing. So everybody's saying, hey, he killed the market. I think it's just an opportunity. He gave you an opportunity to buy. We went over how Powell Industry surged 50% on that article. You can see earnings have another electrifying earnings season, soaring 50%. Any reaction in the market is an overreaction. Powell is not part of my core portfolio. It is part of Alpha Picks. And this was up 50% yesterday. You're going to see it. In fact, it just opened up. Let's see. It's up 0.4%. I think you're going to see it just like it did in the last earnings where it gapped up here. I think you're going to see it posture in this area. But it's not going to come back down here to 76. It's going to posture in this 115 area. And that's what they kind of point out is that, up more than 200% over the last year, over 120% in our Alpha Picks portfolio. One of the big stock movers today launched Alpha Picks in July. And Alpha Picks portfolios delivered incredible results amid market volatility and macro and geopolitical headwinds. Over the last year, industrials are up 14% compared to Powell's 216% run-up. If you're interested in Powell, this is one of the free articles. I'll include this in the newsletter if you want to read it. If you want more on Alpha Picks, click on my link on the link tree because I am an affiliate. I'll get some compensation there. But if you want the free look at Powell Industries, you can click on that one. Let's see. NXT. NXT was a big mover yesterday. And this is a solar. I don't know much about the company. They reported earnings and it moved up big. Again, any reaction in the market is an overreaction, but it's up 20% here. 20%. So that was after their earnings of 96 cents. You can see they go from 48 to 65. That kind of brought them down, but that raised them, and now it's raising again. So NXT, if you want something, that went. Qualcomm, they beat and shot up 7% and quickly reversed course. Qualcomm is now down 4%. There's no reason other than this one just ran up too fast into earnings. They killed it. Look, $1.87, 202, 275. They touted their Apple relationship and Samsung relationship, and they think that cell phone cycles should pick up. So their Snapdragon stuff is good. Their full self-driving stuff is good. The chip business is good. This one at 142, are you buying it? I don't know. I mean, you've got a gap down here at 126. I do think that this volume shelf here at 129, if you break this VWAP at 139, I think look out below. I think you may get to this 135. Remember, chips are kind of one of these runners. One of the biggest movers today is Rocket Labs, RKLB. This was touted. Somebody asked me about it. I don't know who. I said, hey, trade this one. It's a small cap name, and it was touted as one of Shea Boular, who I am a fan of. Shea is a fantastic trader. Great. But Rocket Labs is down 14% today. They diluted. I said be careful of this one because they diluted. They're not making money. It goes back to kind of the core principles. Find a company that's making money, good company with good products, with good management and good profits. This one's not making money. They needed to dilute shareholders. They announced that they're diluting shareholders. You're down 14%. This is a perfect example. I'll include that article so you can see it. DPST, New York Bank. We talked about this one being down 50% yesterday. Here's the article that I'll include in the newsletter so you can see it. And I do think that DPST is here's the kind of quote that I cut and pasted. New York Community Bank stock, the bank that acquired the collapsed Signature Bank. Oh, it wasn't Silicon Valley. It was Signature. Falls 40%. The bank announced that they will be cutting their dividend by 70%. They also reported a fourth quarter loss of $260 million. While expectations were for a gain of that size. This comes just a few weeks before the Fed's emergency loan program is set to expire. Small banks are feeling the pain. So yeah, I'll include that in the newsletter so you can see it. It could be a spot for DPST. So I think that's an interesting one. This was a great, and I want to talk about this Tesla story. So understand, here's kind of the way that I look at this. Dan Ives puts it really well here. The board of Tesla has a number of next moves it could make. Appeal the decision, create a new comp package that supersedes the 2018 one, along with a new one voted at the next shareholder meeting. Devise a new comp package that would get Musk 25%. So they've got those three. Now, if you want to know something, this was a great, absolute, just brilliant tweet by Andrew Sorkin because it goes back to show what this was. So just my understanding of this, and if you want more, you can look at this. But my understanding of this was back in 2018, when the board presented this package to Elon Musk, the company was near bankruptcy. Understand that the stock was still crazy, but it was near bankruptcy. And I completely disagree with the court's decision here. Elon Musk was compensated $50 billion. if the company achieved a $650 billion market cap and certain operational goals. That he got them to that place. Now, is he due $50 billion? The court said no. Shareholders probably say yes. At a $650 billion market cap, that took a bankrupt company to $650 billion? Yeah, the man is worth his weight when it comes to Tesla. He's actually, he's got a shareholder vote in the next meeting to take the company from being incorporated in Delaware to incorporated in Texas, which he feels is significantly better. But I don't think that there's an opportunity for Tesla, but I do think it's worth looking at this this kind of this decision, because it does put in question to me, is Elon staying with Tesla? Is Elon going to get 25% of control of Tesla? Their market cap is now $596 billion because of the recent drops, and the PE is still significant. But understand, if Elon leaves this company because of this compensation not being given to him, he is now in the driver's seat. Because if he leaves this company, this is now going to be valued just like Ford and just like GM, because it will be considered a car company. So here's what you have to understand. The PE of Tesla right now is 43. Okay? That is valued as a tech company. The PE of Ford is 7. So divide 189 by 7. Okay, let's see. What's 189 divided by 7?
It's 27.
That's what your stock price will be without Elon Musk. So I think the court screwed up big. Now, Microsoft, they reported earnings. It's post-earnings. Let's see. Today, it dropped yesterday, not under 400, but it's at 405. Is that justified? Absolutely. And if you want to look at this, these are all the price targets. So just let me give you, for instance, Morgan Stanley from 465 to 450. Down, but still 450. You're at 404. JP Morgan, 440 to 385. Are you thinking it's going back to 385? I don't think so. JP Morgan, remember, I don't invest in JP Morgan. I'm not a big fan of JP Morgan because of the Epstein stuff. Citi, 480 to 470. Bank of America, 480 to 450. Wells Fargo, 460 to 435. We can look at just Microsoft here in FinViz. Again, FinViz is free. Average target price, 455. You're at 400. You're at 405 right now. It's up 1.96%. If you can get this under 400, great. If you can't, just buy it at 405. These guys are going to add $1 trillion in AI to their business. It is the best explanation that I can get. I will include all of this text so that you can read all of these price targets for Microsoft, because I think it's important. This was a great one. Yeah, there we go. Walmart split 3 for 1, just so you know. I had that in there. Microsoft, Stryker. Stryker, ST Stryker. It was asked to me about Stryker, and I said, hey, it's at all-time highs. I don't know. Is it a good one? STRY. SYK is the symbol. I said, I don't know. Is it an all-time high? You're going into earnings. This is kind of like it's a defense company. Do I want to own this one at all-time highs? Well, yeah, you do, because it was up like 10% yesterday. This candle right here represents a 7.74% move from the open at 310 to the close at 334. Stryker, my bad. Anybody that invested in Stryker, high fives. Your boy can get it wrong. These guys, the Big Short, they were all kind of reunited on Fast Money in Miami the day before yesterday. And I watched this clip. It's a great clip. They suggested, none of them suggested getting in shorts, by the way, but they did. I shouldn't say that. They suggested infrastructure with government spending is the best way to play this market. Caterpillar, you can invest in Caterpillar. That's an all-time high. I own Caterpillar. I think I bought it at 280. It's at 305 right now. I bought it back here. So I lived through this downturn, 240. Bought a little bit more. Didn't get rid of it. But you're at all-time highs. Caterpillar was a good one. The ones that they mentioned for shorting was Upstart. Upstart, they think it's just a loan company that can't sell their loans, and it's just bound to go to zero. Upstart is one of these companies. It's an AI. They've positioned it as an AI loan company. Their forward PE is 315. So they have big short positions, 41% shorted. So is this a short squeeze? I don't know. As they start to go up, they will start to dilute. But again, 41%. And they're losing $253 million. They only have $7 per share out there. So they have $250 million kind of floated. They're going to need to dilute. And when they dilute, does this short interest start to go up? Or if they don't dilute, does it start to get into short squeeze? Interesting one, but Upstart was one. The other one that they mentioned was Tesla. They don't believe that it's anything more than an auto company. We just went over if Elon Musk leaves, that could be a huge one if it winds up being in there. One that I trade, that I actually own, that I wanted to point out, because I went into Roblox and stuff like that yesterday. Snowflake is under 200 again. Got you in at 197. I told you I hold this in a retirement account. I trade it on a weekly, and I will show you the weekly because I put this chart in. The range that I like to trade snow in, it broke above this. It's kind of below that $200 mark again. I just think that you're going to get a chance to buy this lower. Its earnings are February 26th. Remember, it's valued as a tech company. It is one that I do own long term, but I do trade. I never get rid of my complete position, but I do trim every time it gets to 200. And then when it gets under 200 and shows me confirmation again, I just buy it. That may be from 200 to 250 based on the next earnings. I don't get rid of the position. I believe in this company long term. So Melissa Lee on that one. There's a new indicator for TrendSpider subscribers, insiders, and this points it out perfectly. You can see every time an insider sells or buys, it puts it on the chart. I will include the indicator in the newsletter, this one, where you can log in and import. You can import it into your thing. I also found out, I'll include this as well. For those of you that don't have TrendSpider, this one is completely free. TrendSpider.com/markets. It gives you trending on stock twits, popular on Wall Street bets, recently halted stocks, which are typically super, super volatile. You can see CMAXW. It's up 952% today. 952%. Popular with retail traders. AMD, Tesla. This is a great bookmark this. Just bookmark this. This is a great list, including popular stock trades, U.S. stock and Senate. So you can see the most recent stock trades. This is a great TrendSpider edition. You don't have to be a TrendSpider subscriber. So I will put that in the newsletter. I really like it. This next one is a good one too that I will bookmark. TrendSpider.com/calculators. And they have all kinds of calculators. Trading risk reward. You can go and look at these calculators. It is a great thing to have. Bookmark this because you can trade profit and loss calculator. You can do all of this for free. You don't need a TrendSpider subscription. So I will also include, just like I did with Microsoft, AMD recently had their earnings, and the same kind of Twitter came out with the stock. Where it's 250, the target prices. AMD went Goldman Sachs from 180 to 157 while maintaining its buy rating. It's at 168, so you got some way down. Citi raised its price target on AMD from 136 to 192. JP Morgan raised the price target to 180 from 115. KeyBank raised its price target to 270 from 195. Rosenblatt raised the price target from 250 to 200. So AMD, it's in my portfolio. I haven't gotten rid of it. I haven't trimmed. I said before earnings, you could trim. I just didn't want to. I will add more. I just like this company. They will be number 2. Damon put on Twitter. He responded to mine. I see some insider sales from yesterday. Meta. Let's go and look at Meta. You can look at these on any platform that you like. You can look at it Seeking Alpha. I just prefer FinViz to look at this. Yeah, you're seeing some January 31st. I mean, not Zuckerberg sold a bunch. I mean, he was selling all through. I mean, look at Zuckerberg's sales. He's selling $26 million. That's a lot at 400 and 402. Yeah, 400. May know something, but he's selling a lot. SMCI. Let's see what SMCI, and more than likely, SMCI is nothing more than this company has just seen, just like Meta. They've just seen a huge run up. Look at this. The president and CEO sold at 252. I mean, if this dude sold at 252 and he sold 12 million, and we're at $500 now, he sold that 12 million is now worth 24 million. He just gave up. And if you think that he's selling this stuff because he has to, or he thinks that the price is exorbitant, that 252, he sold 12 million. That was just him saying, hey, I'm okay making $12 million this year. I need a pool in my backyard in my French villa. That's all he's doing. And CRM, and thank you, Damon, for pointing these out, by the way. I need to keep track of insider trades a little bit more. CRM, you can see Benioff sold. Another $4 million at 287. It's nothing. I mean, Benioff is worth what? $500-600 billion. He's fine. So let's get into some social requests. Thank you again, Damon, for pointing that out. Those three companies. One of them is small, but the other two are big. 26 million on Meta. It's interesting. I don't think it's anything more than he's just sold from time to time, and they're at all-time highs. That's the prudent thing to do when you're at all-time highs. He's not significantly getting rid of his stuff in Meta. But Shep from Spotify, what's your crystal ball think when this big-time move on SMCI 1 to 2 years? I'm up 100% in 3 months. Yes, I am up 100% too, but think we're still in early chapters. I think that article from Seeking Alpha, I think he subscribed to the newsletter. I think it does a better job than anything I can do. But I did put a significant 5-figure buy-in yesterday. We've still got to move higher. I just think it's early in the lifetime. So, Justin, is Plug coming back to life? Curious on how you would play this one. Thanks for all you do. Justin is from Spotify as well. And remember, you can thank me on my 4-year anniversary on Spotify, or just ask me for a stock. Is Plug coming back to life? Yeah. I mean, the algorithm is saying, hey, at 339, yeah, it's up at 499. I still say trade this one. I don't like it to own. It's coming back to life, and it's coming back to life because of some of their stuff in Georgia. They just filled up their tanks in Georgia to hydrogen play. I'm not a fan of it. I'm just not a fan of it. Again, $949 million loss. When's their earnings? Let's see when their earnings are. Their earnings are coming up on February 28th. They just did get an upgrade. I absolutely think, here's my note from last night, before I saw the story about them filling up their tanks. Absolutely not. You will get diluted long-term. If I have not been clear, trade it. I like trading names that have an actual good business, and I don't believe in Plug, but maybe you do. I could be wrong, but I personally would rather trade something like SMCI. I mean, again, do I want to put my money in Plug on hope and prayer that they actually turn a profit someday? Or would I like to put my money into SMCI, which is still in the early stage and still has room to grow based on their earnings? It's up to you, Justin. I mean, I'm never going to tell somebody, in Facebook Live, we just went over Rumble. I don't believe in Rumble. I think Rumble's in a bit of a tough position where they just can't get creators over there. But they just did a deal with Barstool Sports and it popped. Am I buying into Rumble? No, they're still losing money. So, again, it's just about what you believe in. Don't get into a stock without knowing what you're getting into. Plug is not making money. They can go up on hype, on upgrades from analysts and stuff like that. Many times, a lot of analysts that you see are talking their book. They can say that the trading platform has no connection or communication with the actual analysts. But that's BS. Come on. You're telling me two people work in the same office and somebody's going to put out a downgrade on Plug and say it's worthless and that you're not telling your traders to actually get out of that name, you're out of your mind. Come on. I know that's illegal, but it goes on. Come on. Corey from Instagram. Hey, bud, it's been a while. Wanted to get your opinion on PERI. Let's see what this is. PERI is Purian Network. On the fundamental side, it is probably the best value stock I've come across in a while. Full of insider buys, still undervalued, and analyst forecasts have the low estimated price targets above current price. Management stock compensation is a small percentage of revenue and free cash flow, so actually have an incentive to grow the stock's share price. Let's look at PERI. Algorithm has you in at 28.43. Algorithm makes you 27%. Buy and hold over 2 years makes you 37%. So you've been better off buying and holding, but what the algorithm provides you is if there is a huge downturn in this stock, it just provides you some safety. Your average win is 7.5%. Your average loss, and this is where your average loss comes in, it's 5%. But you're probably in a long-term uptrend, I would guess, on this one. Yeah. I mean, you're in all the way from December 2020. You're looking at a pretty good upward chart in here. If we go and look at Finviz, PERI, you're seeing they are making money. The PE is 12. They are an internet content and information company, communication services. $1.37 billion market cap. It's kind of small. Average target price, $37.40. 29.18. Their September was the most recent. Take that average share price, the target price, with a little bit of grain of salt. April 24th of last year, buy to hold with a $36 price target. Those price targets are significantly old. Year to date, you're down 5.7. Performance over the year, 12.9% over 1 year. I don't see any insider stuff listed, at least on Finviz. But if we go over to Seeking Alpha, let's see what Seeking Alpha says about this one, because I know nothing about it. I mean, to be honest with you, and Corey knows I would never talk you out of an investment. I'm just not seeing anything here that says to me, hey, I'm super excited about this. Buy. I mean, they like it. Communication services, 5 out of 33. Their number one is DRCT, Direct Digital Holdings. That's a 4.9. So, but you still have a buy on this one. If we go back, this is the advertising stock. So I guess they do advertising on the internet. Let's see. Provides digital advertising solutions to brands, agencies, and publishers in North America and Europe. Internationally, provides Wildlife, a content monetization platform. Wildfire, search monetization solutions, including website monetization. Nothing gets me excited. I mean, founded in 1999. If we look at some of the peers on this one, if we look, peers is a great one to look at, by the way, here. 1.39 billion. Everything's kind of in that neighborhood. They have 440 employees. They're significantly smaller than most of these, which is probably pretty good. They're down 13%, whereas ADV is up 58% over 1 year. So, I mean, they're the only ones listed as buy. Strong buy is STGW. So, again, these are the tools that you can use to try and research this. I got a stock, and I didn't put the name in, sorry, but it looks like it's from the newsletter. I ran across a stock today doing some research. I came across RicTech Robotics. Their stock opened 11.23 with the SEC. Let's see, RicTech. I didn't look this one up before. RicTech Robotics. There it is. RR. Let's see what they've got. RicTech Robotics down 56%. Let's see. From what I've read, they deployed. There's not much on here. I mean, nobody covers it. So I'd probably stay away from it. If you can't find stuff about a business, stay away from it. The summary on this one, there's nobody covering it on Wall Street. There's nothing here. So hold on 1 second again. Hey. Hey. Your friend. Did you come in? Oh, she's here. Okay. We just had a visitor come in, so. Sorry about that. Dogs, somebody came in the house. But if you can't find something, I mean, I'd rather not hope and pray. There's too many good stocks out there to hope and pray on something in my mind. Let's go over some scans. SCO. This is the inverse. This is the bear of oil. 1880. This has been a killer performance of lately on SCO because, again, oil has been going down. So while oil went up, this one went down. While oil may now be going down, we can look at FinViz to see where's oil price. Oil price is way down to do crude oil 76. That's why I'm thinking, Exxon may put out some upward guidance. And that's why I'm thinking, it might be a good one to buy. Boyle, on the other hand, had a cross up. This one, I've said beware of this one every little bit. But you can see we've had some good I went in pre-market when I saw this one. This is where, so look at the MACD down here at about 0.95, between 1 and 0.95. That's where it crossed up. You had a nice 30% gain there where the MACD was. The RSI was in similar place. Here, you had the MACD had already crossed up, but the MACD is kind of in that same neighborhood, and you had a nice 30% gain. This one, the RSI is kind of in the same neighborhood. It's at 38. The MACD is crossing down here. I think, natural gas is just cheaper. Remember, this is a decaying asset. So these lower lows always will mean this is a decaying asset and you want to get in and get out. Now, there were a couple of levered ETFs, SDS, HIBS, and SMDD. These are all shorts on the market. SDS is an ultra short S&P 500, so it's triple levered. 28.75. Do you want to get into this one? You're down 0.62. I've said it before. I think this is going to be a bounce back. I think the overreaction in Powell will bring us back up. I am not getting out of things. I am still in TQQQ. I am still in other stuff. SPXU also went up. I went over ELF. I think ELF is a great, I think before earnings, you get into ELF. And the final one, Lowe's. LOW. You don't have a lot of scans today. That just means yesterday was really bad. We're coming back on the platform. Meta's up 2%. It's almost up over 400. Amazon is almost up over 160. Apple is still down at 185. Yeah. I mean, it's earnings. It's earnings week. Join Jason from TrendSpider on YouTube Live for the after all the earnings and stuff at 3:30 today on YouTube Live. I will be there as well, so you can say hi to me. Tell Jason that I sent you. Yeah. Let's have some fun today because today should be some good stuff. And again, have I mentioned SMCI lately? Go to my link tree. There are 5 tools that I suggest if you have a large enough portfolio. The first one is TrendSpider. I can't live without it. You sign up here, use the code DSP25 for an additional 25% off. Once you sign up, you email me. I will email you my 4-hour algorithm. I will email you all the watch lists, all the scanners, everything that I use, you will get to import into TrendSpider. Seeking Alpha Premium, $50 off. It's $189. You can't go without. I can't go without this. I should say. $189. If you only have a small portfolio, do not spend money on this stuff. The final one, we went over it. Vizio. Was it? Let's see. It is TWLO. TWLO is the pick. Alpha picks. Their performance is unmatched. I mean, again, I can't tell you enough that their performance is unbelievable. This is the Alpha picks, up 92% versus 28% for the S&P. That is the third one. The fourth one is Webull. If you're not lying in bed watching charts at 5 a.m. with Webull, you're nuts. You're crazy. Yeah, I love this one. I really do love Webull. I put $4,000 in there. I suggest you use this link. You get free stocks. I've got $4,200 in there now. I've got $3 in cash, so I'm not trading in Webull anytime soon. But I am going to get out of a couple of positions just with huge gains. Cat, Snap, Spotify, TQQ. I'm up 6.5%. I need to get out of that. Gap. I'm up 30% on Gap. Procter and Gamble. IONQ, I'm actually down 7% on IONQ. I didn't get out. It's at 10.18. I was up like 30% on that one. But yeah, and then the newsletter. The newsletter is free during the week, but there is a paid section. So those are the tools that I recommend. If you have any questions, hit me up. All the socials are up here. You can email me. You can do whatever you need to do. I will talk to you guys tomorrow Tomorrow is Friday, so summary tomorrow. Okay, take care. I will let you know if I bought Exxon, if I bought Chevron for earnings tomorrow morning. Probably on one of the social media platforms. I'm not sure I'm going to do it before I publish the newsletter. So I'll let you know. Take care. Bye. Okay, let me look at your comments. Let's see. Colby. Are the alpha picks meant to be short-term or long-term in this case? Are they recommended TWLO for long-term? It's all long-term. It's buy and hold for 1 year. It's all long-term. Pavan, I am losing my patience. I am, in fact, my girlfriend can quote you this morning. She's like, PayPal, it just hasn't done anything. I said, yeah, got to wait for their earnings to say something. But I was not impressed with their product day, shocking the world. So I'm losing my patience with PayPal as well. Shopify is not stuck. You're just late to the game on Shopify, Pavan. 80 was the pivot point, and you can see kind of button hook there. But 80 was the pivot point. When we were down here in September, I was saying load up on this one. Probably way back when. I mean, just look. You've reached the 200 day at 81, and it's rejecting. So it is not a time to necessarily get out, but it's a time to load back up as they push through this. Their earnings are coming up on Shopify February 12th. As they push through this, I think they're going to break through that 200 day, but it's a long-term one, Pavan. I'm not, listen, I had initial buys somewhere in this neighborhood of 100. And it wasn't large, but it was a small one. As this started, I started adding more. As we got down here, I believed in it more. When they said around 40 that they got rid of their fulfillment center and would just allow Amazon to fulfill for them and got rid of their cost sector, I added a ton more. Back here, when it was at 49 or 50, I just added more. $80 was the price. So, yeah. I agree with Christian. You're just late to the volatility rally. I shot back at 33. If you buy now, you just got to be patient. It's a great company and will grow over the time. I'm never selling. Yeah. Christian is right. It's just a time. And thank you, Sherry. Hopefully you're still here for me to say thank you. Great advice, Christian. Yeah, I say it all the time. Pick 5 stocks. Pick one and just watch it. And on the chart, you'll get to understand your charts very quickly if you just watch one stock. Yeah, Joe uses them. Chris, your average price on RTX is my average price. I was going over it with Fidelity this week, but my average price is somewhere near $1.50. At this point, I only add in retirement, and that's my brokerage account. My average price in my retirement account is probably significantly higher. And the only reason is because the efforts at Earthlink wouldn't let me have interim distribution to manage my own 401k. Finkelstein, here's what a lot of people don't understand about Shopify is that Finkelstein actually bought a large number of businesses that used Shopify. So he bought stock in those businesses. So not only does Shopify actually get revenue from the businesses, their stock portfolio, which he bought a bunch of investments in, has been growing incredibly well. I'm in the camp of May. I think Powell could shock the markets on the good side with a March one, but I tend to think he's going to stay till May. And my only concern is is that staying too long? So, yeah, Pavan. So Pavan, one of the advice that I always give is before you buy something, you have to identify it as long, short, medium, whatever you want to hold it. You have to put your price targets in on the bottom and the top. And you have to make sure that you stick to that. If it becomes a larger portion of your portfolio, you can decide if you want to be a portfolio manager. Every one of my portfolio managers said, do not let Apple get that big in your portfolio. In fact, there's a big red flag when I log into Fidelity that says, Apple is too big in your portfolio. Amazon is too big in your portfolio. Microsoft is too big in your portfolio. Think about trimming. I don't. But if I do have to sell to find new opportunities, I know where to sell. Because, you look at the charts. And PayPal and Shopify. Shopify, I don't think is a sell just because it's not at its all-time high. You look at something like an Amazon, which is at 158. Does it have room to get to 170? I don't know, maybe. But you look at Google at 160 when it was up there. That was a good time to trim, to grab some cash. You look at something like Microsoft at all-time highs at 406. Are you crazy selling at 406? I think so. But if you want to take some cash, that's not a bad place to sell. Shopify, on the other hand, while it does look, if it is a long-term in your portfolio, that's a crazy time to sell. If it's a short-term, it's not a bad time to sell. But you've got to identify those in your portfolio. And Scott, it's one of your favorite parts, but it's one of the most stressful parts because I yelled into the microphone and I hate it. I will put a photo of the dogs. Hey, Maya, we're going to take a picture. We're going to have a photo shoot with the dogs. She's going to take photos of me with the dogs. I love Cat. Caterpillar is just a fantastic, fantastic company. I mean, when it dipped, buy. That was a total buy opportunity down here. Infrastructure is just crazy. And thank you, Sherry, for saying it was a great show. Yeah, Chris, traders have to be up. Pre-market is where the volatility is. I did not get into SOXS. I recommended SOXS, but I did not get in. Remember, Pavan, shorts scare the hell out of me. And my biggest fan, Lucas, is here. But shorts scare the hell out of me, Pavan. So I didn't get into SOXS. I didn't trim my AMD. I'm looking at this as an opportunity to buy. But SOXS is up 0.56%. But I didn't get into it. The shorts tend to make me lose sleep. And remember, one of the biggest things that I always tell people is, if you lose sleep, don't do it. It's not worth it. So I didn't get into that. I did not. In fact, I lost, and I told some people this yesterday, but I lost 6 figures yesterday. I mean, good at 6 figures. It was not easy, but when Apple goes down that much, when Amazon goes down that much, it's just, it's hard for my portfolio. Now I'm up 5 figures today. Yeah, Chris is and just understand, Pavan, I'm not a quote unquote trader. Those triple levered ETFs are trades, and the TQQQ I should have gotten out yesterday, and I posted that on most of the stuff. I think I posted here. This is what I saw yesterday. That gap right there between like 55 and 54 was the open. As it started to fill and it lost this gap at 54, I should have sold. Now, where is TQQQ today? Let's see. I wanted to get out at 54. It's at 53.65. I mean, we opened up at 53.29. What I'm going to do is get out of the strategy tester, and I'm going to open up, and we'll go to extended hours here. Display extended hours, and then we'll go to a 5-minute chart. because this is something that you do want to do every now and then, is look at the trend of when you're looking to sell, you want to look at the trend. And we're in an upward trend right now. We saw this dip yesterday after hours. We saw it start to come back after hours. And today at 4 a.m., it opened up at 53.70. That's going to be the support. We're right there right now at 53.70. We've made our way back. I would expect, let's see, do we have upward? See, so if you go back here, this is definitely a short-term trade. And so we'll go back to the beginning of the day on January 30th. You know what? Let's take the start of this slide, because the start of this slide was in after hours on January 29th. This was trading at 57, okay? I've held through this. I haven't gotten out of it. Mistake? Probably, because again, it's a triple levered ETF. But where are the majority of people who bought at this high holding? They're holding down here between 53 and 53.48 and 53.72. That's the big one right there, and it's building this volume shelf. Now, I will probably, honest to God, I will probably put in my sell today at 54 and see if it hits it. I'll put my downside probably at 53.50. And so within that range, I'm going to look to sell because I'm not sure what's going to happen after hours today. If Apple and those guys go down, then we're looking at a 52 and I'll just buy in later. In fact, I'm going to put that in right now. We're going to put in, let's see, all positions. Let's see. You know what? I probably have to do this on the computer. Yeah. I'm not going to do this in the app. Yeah, I can't do it in the app. No, I have to do it on the computer. So that means I'm going to get off here. I think Amazon's going to print, but I'm not buying into it after the Microsoft and Google stuff. Microsoft printed a pristine, way better than should have been expected quarter, and they weren't rewarded. So Amazon, I mean, your guess is as good as mine. So yeah. Okay. I am out of here. I will see you guys tomorrow. Take care. Okay, bye.